Garana stuff. Money. Part 4. Long-term debt. I've talked about money in terms of getting getting a handle on what your mandatory expenses are, taking a look how you're doing as versus to your income. I've talked about budgeting, spreadsheets. I've talked about credit cards. Uh, and now I'd like to talk about long-term debt. Well, what is long-term debt? Um, it's where you sign papers for things. Example is a car loan. You go into a dealership, you decide you want this particular car, the salesman takes you in and he begins to write up a contract, and he says, you want us to finance it or are you going to finance it? You can finance it and go to your bank or credit union or whatever and take them the paperwork for this vehicle, shows the total price and how much you're going to put down, and they can lend you the money or the dealer can do it. If the dealer does it, he'll have the sale document and then they'll have the loan document. If you're buying a house, the car loan, it's because it could be for up to 72 months. They offer financing now through Ford or GM or whatever. They can offer financing, and they have deals all the time about this, and you can finance through them for up to 72 months if you make a significant down payment. And back to credit cards, some people will use their credit card to make the down payment, and that's not a terrible idea if you can pay off the credit card debt real quick. You don't want to be carrying around a $5,000 down payment on a car on a credit card and then have a car payment as well, even though they might give you 2 or 3 months without any payment on your actual car loan. Okay, so anyway, long-term debt is more than a couple years. You borrowed usually a bigger chunk. A long-term debt is a student loan. When I was in college, each year I had to go to the bank and sign another loan document for my tuition, room, and board. And I don't know, that money might have gone straight to school. I don't remember. Maybe my father or parents took care of that aspect of it. But anyway, I signed a note. And under the terms of the agreement, there was no interest going to be due until I graduated or I had withdrawn from school. And then I would start making payments on the total amount of my student debt. And it depends on the paperwork. And this is what I'm kind of getting to, all about long-term debt. It depends on a home mortgage, 15 years, 30 years. They might have 10-year mortgages. They also have floating rate mortgages, which is another thing I need to talk about, because some people will do that and they offer a very low starting rate, and that way they can afford to buy the house. But like now, where Federal Reserve has been raising interest rates, every time they raise interest rates, the loan, your mortgage loan related to a floating rate interest, goes up. And then back to the paperwork. The paperwork has details on long-term loans, be it a car loan, a student debt loan, a home mortgage, a business loan of some kind, anything that stretches out for, say, more than 36 months or 30 years. I mean, student loans, I think there's something about I read where after 20 or 30 years, if you've been making payments, regular payments on your student loan, the federal institution which buys most student loans and holds the paper, i.e. holds the debt, can forgive the remainder of the loan. I think that's how President Biden is forgiving some of the student debt, is the government agency to track payments hasn't been doing a very good job for it. They don't have every payment that a student has ever made on their loan. Therefore, he said, well, we'll just give 24 months credit to everybody. And that should take care of that issue. And anybody within 24 months of having met the 20 or 30-year requirement, whatever it is, we'll just forgive the rest of it. And I think it was like $6 or $8, $10 billion. I don't know. I could have that wrong. But anyway, terms of the loan and percentage of the interest rate on the loan and repayment penalties, if there are any, those sorts of things will all be in that paperwork that you're going to sign for a car, student loan, mortgage, business loan. I don't even know, there may be other types, like a long-term financing on a refrigerator. Maybe you can pay it off in 5 years. It's not a credit card, it's a separate kind of loan. Okay. The point being is there's paperwork, and there are specifics in the paperwork. As I mentioned before, I had a call from a guy. He was a friend of my daughter, and he bought a truck. It was used, but it was relatively new. He bought a truck, and the day he bought it, he had done test drive, and he was out with the salesman, and the salesman said it was $29,000 or something. But if you buy today, we'll give it to you for 25 grand. And so, guy that intrigued the guy. I mean, 25 grand. That's a good price for this truck. It's 29. It's not outlandish. 25 is a deal. So he also talked to the salesman about, well, how long, financing term. How long do I have to pay it all back? And the guy in the car said, I think it's 48 months. And I think you'll notice he said, I think it's 48 months. And so the guy, deal. So they went into the office, the paperwork got written up, he signed it, okay. First month after he had the truck, he got a payment statement saying he owed this amount of months for this month. And in the little details that were supplied there, one, it was for $29,000, not 25, and it was for 72 months, not 48 or whatever the salesman had said in the truck. So he called the dealership up and he said, hey, this is not what I agreed to. And you know what they told him, don't you? But you signed the paper. I got a document right here. I got a copy. You signed it. By signing that document, you agreed to those terms. This has to do with contract law. In this case, he signed for a $29,000 loan when he thought he was going to pay 25 grand, and he signed on for 72-month payment when he thought he was going to pay it off in 48. The dealership just wouldn't do anything for him, and he was asking me what to do, and I said, you got to get a lawyer. Their dealership is never going to do anything about this. And I don't even know if a contract lawyer will be able to help you because you signed the papers. And you can have all the discussions you want about, well, the salesman said this or the salesman said that, or you believed or whatever. Without proof, it's going to be difficult. So what I'm trying to warn you about is a long term debt. When you're signing stuff, you really need to read it and understand it. And if there's areas you don't understand, a clause of somewhere, you need to have it explained to you and maybe even reviewed by an attorney before you sign it. The people at the dealership or home mortgage people, they might not fully understand it either. They might give you wrong information. but it's all hearsay. It's what you heard may not be in fact what they said. You misinterpreted it. So make sure you really understand what's in that document that you're signing for a long-term debt, 48 months, 72 months, 20 years, 30 years, 50 years, I don't know. You really make sure that. There was a case where my son-in-law bought a truck, financed it through the dealership. Uh, Everything was fine. He he came into some money. He wanted to pay the truck off. He contacted the lender to see, okay, what's his payoff amount for this day, because I'm going to pay it that day. And he said, you can't pay it off early. What? Yeah. Some of these type loans, who they're made to and how they're made, can have clauses that you can't pay it off early, or you incur some big fat penalty. They gave you the money expecting you're going to be making such and such a payment for such and such a period of time. They may have even sold that loan paper to somebody else with the terms directly on it saying you were going to be paying interest for 48 months. You're only in the fifth month of your loan and you want to pay it off? No. So you've got to be careful of that. There used to be penalties on home mortgages like that. I don't know if there still are or not, but if the term period, like you sign up for a 30-year mortgage and after year one you want to pay it all off, they might have a penalty involved with that because they put the money out there at a fixed interest rate, expecting that you were going to make monthly payments and they would be getting that interest rate for some extended period of time. Now, during that period that you signed up and have been making payments, interest rates went down. So any loan they make now would have to be made at a lower interest rate than you're currently paying. You understand why they don't want you to pay it off early? You signed up for a 6% loan. That's what you're going to pay. 3 years later, interest rates have now down to 3%, 2% on car loans. Why would they want to get all of your money back when they were earning 6% on it, when they have to now lend it back out again at simply 3%? So there are sometimes clauses in there like that you have to be alert for. If the period is not what you think it is, pay it back in 60 months, 30 months, 50 months, whatever it says, whatever you think it says, it should be specifically called out. And any repayment early, maybe you can repay it after 24 months. Maybe you can't repay at all, or you incur a penalty, and you're okay with the penalty. You don't expect to be paying it off early, so you sign up and okay. You got to check these things in the details of the loan documents. Um, that's true for home mortgages, student loans, car loans, business loans, um, maybe loans for medical billing. And that's a separate case, where you had a big medical procedure and you don't have health insurance, so the hospital sets up a payment plan for you. And you may have to sign that, you probably do, because otherwise they're going to want their money. And you set up a payment plan, and you better read all the details of their payment plan. Now, if not paying these things have consequences. You can have a car repossessed. They can foreclose on your house. They can, in the case of a medical billing, they can take you into court and sue you for that money and put liens on your paychecks. In fact, the government, they're pretty good at that. If you're a government employee, people can approach the government and say, look, this guy owed me money and he hasn't been paying it, so the government will take it out of his paycheck before he ever gets it to pay off this outstanding debt. And in fact, that's one of the things I think student loan debt is like that. It literally can be taken out of a paycheck before a government employee gets it. Okay. In the case of a medical expense like that, where you've made a deal with a hospital, they have that right to do that. They could take you to court. Now, they don't want to, it's extra money, but if you don't try to work with them, and that's the case on any of these loans, no matter what you signed, and you didn't think you signed up for this, but now it's that, you can try talking to them or working with them. If that doesn't work, you got to get a lawyer. Can the lawyer help you? I don't know. There are free lawyers. I've forgotten what the term is called, but you can go try going to one of those places, and perhaps they'll look into your case for you, and maybe they can do something. There was a case one time, I remember it. Next door to me, there was an older lady, and her husband had passed away, and they're friends. Been friends forever. He had worked with this guy in federal government for 30 years or something, and the husband passed away. So they came to this old lady, and he said, "We know money's tight. The pension is good, but it's tough. So I tell you what we'll do. What do you think about a reverse mortgage? We'll give you, a line of credit, if you will, for $200,000 on your house. You can live here for as long as you live, and you don't have to pay anything back, but when you pass away, the house comes to us." Well, that's the idea of a reverse mortgage, by the way. Um, the old lady, okay, and here's the key point on this. Her house at the time was probably worth $600,000. I don't know exactly what they said she would get a line of credit for that she could draw on, up to a certain maximum amount of money. Okay, let's say it was 50,000. What I'm trying to get at is the house was worth 600. They said 50,000. That's all we'll give you. When you pass away, we get the house. I think some of her relatives or somebody found out about this reverse mortgage, and when they looked into it, that you said, "You got to be kidding me! The house is worth 600 grand, and they're literally buying it from you for $50,000. Yeah, you can live here forever until you pass away, but when you do, they get the house for $50,000. That's it. That's all they've ever put out for it." So they talked to a lawyer, and the lawyer said, "Well, she signed the papers. She was supposedly in clear mind at the time and whatever. The only way that the lawyer could approach this particular problem is if she was willing, and her relatives were willing to commit to say in court that she had been mentally incapacitated at the time. She was incompetent to be signing a $600,000 house off for a $50,000 reverse mortgage loan. She didn't want to do that. I understand. It was bad enough the embarrassment this had come to light, and now she was going to have to say that she was incompetent at the time. She didn't like that idea, and I don't blame her. And so those people, I don't know, it's not illegal, but it was certainly wrong. That can happen. You got to be careful. I had a friend who took a reverse mortgage on his house because he wasn't making ends meet on his pension and Social Security. He liked spending money. He liked buying stuff and doing things, and it was more than he was taking in. So he did reverse mortgage his house, and I think he signed up for it, and it made sense. And this is another provision when you look into long-term debt was, in the case of reverse mortgage, he had his daughter as whatever you call him. So when he passed away, as long as his daughter was living there, that was her principal residence, she did not have to sell the house to pay back what he now owed by withdrawing money from what they had offered a line of credit. In his case, I think they gave him $300,000 line of credit, and he could withdraw. He could little write a check on that amount anytime he wanted to, and he, some months he didn't have to, some months he did. But in this case, he was smart enough to put his daughter in there, and it costs a little more. Either they charge more in interest, or they charge more upfront costs. But he had his daughter in there, so when he did pass away, she inherited the house. She did not immediately have to sell the house and move. She could live there as long as she was alive, and maybe then sell it for what it was actually worth at the time, instead of, in his case, the reverse mortgage people would have gotten hold probably $1 million house for less than $300,000, whatever they gave him um, as a line value worth that he could draw on. That's about reverse mortgages, but the idea is the same. You need to look into the paperwork. There are sometimes options. I had a insurance policy that I needed and had to make annual payments on it. And the way it was structured was there were some dividends to be kicked off by the insurance, which was going to help pay for each year's premium. And the idea was that at some time in the future there would be enough dividends coming off that would pay literally all of the premium amount. Well, it didn't turn out like that. Interest rates dropped, and what we expected to get in dividends or returns off of the money we had put into it was actually whole life insurance. Didn't work out. So I wound up cashing that out. And this comes into what's known as net present value. And here's other aspects of things that net present value. If let's say you won the lottery and you've heard about it there, the lottery value is said it's $1 billion. But if you take cash and don't have it spread over 40 years or 30 years or 20 years or whatever it is, they calculate what's known as net present value based on a billion paid over 30 years and with inflation out there and blah, 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 blah. They come up with a number, and there is a fixed formula for this that gives you what is it worth today as opposed to a billion in the future. And it's usually like a billion would be like 600, $700 million. A big number, granted, but you see it's not the billion. It's net present value, what it would be worth today. That was the case on a variety of things if you go to cash something out. Again, it depends on the terms and conditions that you signed up for. Terms and conditions. Credit cards have tons of terms and conditions, lots of fine print. Home mortgages, any kind of loan, they have clauses. You may or may not understand it. It may or may not. I can assign this. Usually they sell the debt. I had a home mortgage one time, and I think it got sold like 7 times in 6 years. It went from one mortgage company to another mortgage company, and they sent me a new coupon book and went to another mortgage company. And here's another aspect that's interesting that I'll bring up related to the whole paperwork issue. I wound up paying the mortgage off. In fact, every time it was sold from one mortgage company to another, the mortgage company that had sold it would send a note to the real estate people in the county or city or state that I lived in and told them that the lien that they had on my house for the home mortgage had been satisfied. And the people that had bought that loan then put a new lien on the house saying, we now have the mortgage. Okay, this all happened sort of transparently, and it's like, fine, whatever. I'm only paying one mortgage. What do I care? The other guy's out of the way. Okay, I wound up paying, in fact, I'd signed up early on for a 15-year mortgage. Pay it off as quick as I can. I paid it off, okay? I'd lived in a house another 15 years, okay? I went to sell it. Everything was going along. It got sold. They were working the paperwork out. The title insurance company called and said, the title's not clean. I said, what are you talking about? I haven't paid a mortgage in 15 years. He said, there's a mortgage on your property. I said, no, there isn't. So I had to go in. And here's another aspect, paperwork, an aspect of long-term documents, home mortgages. I had to take every document I had ever had related to those mortgages into the title company. And luckily I had kept them all. Every scrap of paper for every home mortgage I'd ever had, and I'd already had one, two, three at that time, okay? I had to take it all in, and they weren't in order, and I had to sort it out and try to figure out, okay, this loan got sold to that guy, and that guy bought it, and then he did the bay. And I finally figured out what happened the last time the loan was sold. Countrywide Mortgage had not sent to the real estate tax people in the city I lived in a release of that note. They never had done it. Um, the one after them had, that I wound up paying off, but Countrywide, when they sold it to the last lender, they didn't send a release. And I couldn't find one in my paperwork. They never notified me. I didn't know that mortgage was there because I wasn't paying on it. As far as I've known, everything was clean. So the title guy, he was impressed that I had all his documents, that I could trace everything back. And he understood the situation. And he was also aware that Countrywide Mortgage had been notorious for this. They had failed to their due diligence to send in. So in this particular case, since my last loan had been a 15-year loan, and I was within 2 months, there is a clause and that sort of stuff, and this is beside the point, but a loan that's been outstanding, like a 15-year loan, if it's no payments have been made on it for 15 years, it's been paid off literally for 15 years, uh, the title is considered clean if the buyer is willing to accept. In this case, I was 2 months away from having been mortgage free for 15 years, and the terms of the mortgage was after 15 years it was null and void, and they would have sued me, but they didn't because I paid it off. The point being is, here's paperwork, and you need to hold on to all your paperwork, especially if you have a dispute. When you buy a car from a dealership, they're probably going to take and sell that loan to somebody else. You got the original paperwork. You may or may not get the paperwork for the new loan. If something goes wrong somewhere, you better have what you signed, even though you don't agree with what you signed. Long-term debt. Be careful of the paperwork. Know what you're signing. Don't sign up for more than you can afford. A ways back, we had a terrible housing crisis, if you remember that. This was Clinton and I think other groups decided that owning a home was a right. Every person ought to have the right to own their home. So they told everybody to relax the requirements for home buying. You can minimize down payments. You can minimize, and they start looking at, well, what is your income versus what your expenses are, and can you afford this mortgage? And they said, well, we'll soften that a little bit, you know. And they did. And people bought mortgages, not realizing they were going to have homeowners insurance and this and that and the other. And pretty soon they're not making ends meet. And pretty soon they can't pay the mortgage anymore, and it's foreclosed on. And there was a massive market of foreclosures. And Wall Street took a giant hit because they had sold all these mortgages off to somebody else and bundled them together and sold them. And now they were worthless. and there were people that had offered insurance on bundles of mortgages, and they didn't have enough to pay a defaulted package of foreclosure mortgages. And this rippled around the world. Periodically, the government in their wisdom says we really ought to allow, I mean, people have a right to own a home, right? So we'll adjust things there. We'll make it easier. Savings and loans, you don't have to do this, or banks, you can look the other way. It was all perfectly legal. And the guy filling out the paperwork, he got a commission. What he cared what he knew in the back of his mind, you could not afford this house monthly. But in the back of his mind, he got paid a commission for writing it all up, so he did it. End of story. This all has to do with long-term debt. I'm telling you to be cautious and careful. Read all the fine print. Don't sign it if you don't understand it. Don't do it if you feel uncomfortable about it. You can shop around. Maybe you can get a lower rate. Don't use credit cards. Not for a long-term purchase like that. This is Uncle Ron stuff. This had to do with money. This had to do with long-term debt. And I'm applying mortgages, car loans, student loans, anything like that. Hopefully this has been some value to you. I know when I finish, I'll think of 27 other variations of things I should tell you about, but it's already too long. It's the 14th of November, and I should be outside, but I'm not because I'm lazy. That's all for now. Bye-bye.